Hello, welcome everybody. Today we're going to go into talking about decision matrix and the process to go about making trade decisions and the tools to use to do that. Before we go into it, I want to go through a general disclosure. All information that we present is for educational purposes and only should not be considered specific investment advice nor recommendations. Risk disclosure, cryptocurrencies, futures, options, forex, and stock trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. And only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. I'm John Slazas from Dharma Capital Trading. Been trading markets for over 35 years. Started out on the Mercantile Exchange floor and got involved trading crypto in 2013 and pretty full time with it in 2017. You can come to our website at dharmacapital.trade. Follow me on X at dharmacaptrading. Check out our YouTube and Substack. If you enjoy this video, click like, share it with your friends. Our mission is to create a positive impact to help traders achieve their full potential. That's what we're all about. We empower traders with fact-based solutions that enhance self-awareness and decision-making, and our approach enables traders to execute trades confidently and effectively by facilitating a state of flow. So everything that we do is based on providing you with the best facts, and when you have the best facts, you can make clear decisions. When you're dealing with subjective data, subjective inputs, there's always that doubt or question: is it going to work or not? But our focus is on facts, so that it really helps you to engage with what is true and what's happening in the marketplace. And that's what fact-based trading is. It involves making decisions based on objective data and analysis, and this reduces speculation and subjective biases. It gives you that statistical benchmark to kind of mark your emotions, mark your insights, what's more likely to occur. And today we're going to go through some of the tools that we use to do that, and we're going to go use the playbook, what we call our price map, which defines market structure, and we're going to get into Bookmap. So basically what we're doing with our decision matrix is we're going to identify the context of the market. What's the environment? So we just want to be clear of, are we, if we're taking a sports analogy, or is it raining out, or is it light out? We're playing under the lights, or what's the granularity of the field? All these things are going to make a difference in what tactics we want to apply. So we want to have a real truth of what the foundation of the market is, and we want to define that context. And the playbook does that, and we'll get into that in a minute. Next thing we're going to do is to identify, real-time facts. How is price behavior performing within the structure of that context? And so that's where we're going to get our insight to: is the market performing to the expectation of that context or not? And once we get through that, then we're going to define the opportunity to execute, and we're going to use Bookmap to kind of get into the microstructure of the marketplace to do that. So step one, identifying the context with the playbook. And so I'm going to flip back and forth from the presentation to live markets, and we're going to go through the playbook to understand, what's the state of the market and its characteristics, what's the structure of that state and its bias, and what strategy themes are a function of that state and structure. So this is our playbook application, and it's designed to do just that. We have state, structure, strategy tabs. We also have our option strategy tab. But what this market grid does is it color codes the market state conditions, so you can quickly identify markets that are in like states. Currently we're going to take a look at Bitcoin, and it's in a bull trend state. So every market that's in a bull trend state is going to, they're all the same condition. It's all the same context. Polkadot is in a neutral trend, neutral digestive state. So that just changes the context. This state is more, potentially sideways, but also sideways states can be the precursor to a breakout. So, every market is always transitioning from one state to the next. So the markets are dynamic; they're constantly shifting. And so, a digestive state is interesting because the expectation is sideways, but it's also, you need to be aware that when that thing shifts and starts to move out of that digestive state, we can have a breakout, and it can be powerful. Just as if, for the Ether Bitcoin cross, we've got, is in a bear trend acceleration, so a really super negative acceleration trend. Well, in that state, the market's, has been getting slammed and really producing things, and it's either just going to continue to aggressively go, and if it stops, you can have one of those really fast corrective rallies. So each market state is going to have, the expectation. So bull trend, higher move highs, higher move lows. That's the expectations. That's where we set in. We have expectations of what momentum should be doing. Good momentum, positive bias, volatility should be good and increasing, and we're in a positive trend. So this is the expectation. This is the foundation. So we know states change from, shift. Well, where do they shift? Well, they shift at structure points. And so in a positive trend, it's pretty straightforward. Those lower troughs. So as the market's making higher move highs, higher move lows, you've got the first structure break is going to be you make a new move low, that's a problem with the bull trend. And you break the second structure break, it's a real problem. It's over. It's validated that it's over. And so what we do is we identify a couple things on the structure, really with 3 price points. And the main one is this green number. We call it our reversal level, or R level. And that defines the sentiment for the state. So above this price, we're positive buying breaks. Below this price, we're negative selling rally. It's simple as that. It's the point of dynamic equilibrium for the trade period. And today that was at 41,556. So that's where the real energy of the market is here for the buyers. It's below the market. So that's why sentiment is positive. And then what we do is we define what we call our critical range with an upside pivot and downside pivot, which is marked here on the expectation image. And so the upside pivot is helping us to define, okay, where's that upper lid that's going to contain this positive trend from a new extension higher? And today that's coming in at 43,666. And on the downside, where's that lower support that we can expect higher move lows? In the market to build higher move lows. Well, that will comes in at 42,259. And so we've identified, so we're identifying the context as positive trend. We're identifying the structure points. We know that the market can break all the way down to here, and it's still positive trend. We can, we're going to keep a buy break outlook above these price points. And these price points are the key areas where we want to engage with the market, because that's where we can define our risk. So it's all about managing your risk. This is how you manage your risk. You stick with executing and around structure points where the market's going to make big decisions. The other thing about structure that's interesting is the metrics that we get out of it, which tells us what segment moves the market's trading in. And so currently, Bitcoin's trading in $700 segments. And this number will change day to day. But basically, that's what that's what the market wants to pay you out on. This is what, if you put any capital at risk, you're going for $700 in Bitcoin. You could use 350, half of that, as a place to work something, and a good objective target for, a good win would be a $1,400 move, like two of these average price net distances or segments. And on the risk side, we get also some metrics that tell us, hey, you're probably going to have to risk at least $98, or maybe, and at the very most, you're risking $300 to get that. you definitely want to keep your risk reward ratios in alignment. So if you're, keep it in, I like to be close to 3 to 1. Make 3, risk 1 to do it. And so since we have this state and structure, and again, we're just really defining the context of what's happening here, and this is a playbook. It does any market that's in a bull trend that has the similar structure, and different markets will have different structure points. Maker, its sentiment's in the middle, so it's a bull trend, but it's a little different. Theta is a little different, where the sentiment's at part of the critical range, so that it provides just a little bit of a skew on the structure. But end of the day, it's a positive trend, and then we're going to get insights to what that means based on where the structure is. And because we're in that state and structure, there's specific optimal strategy themes. Again, we're just setting the context. What do we want to do? What's the best thing to do? Well, the best thing to do is buy a break off the R level, because that's where the risk is. This is the ultimate risk of this bull trend. So this is going to be where we want to put our max size on. So this is how you can really work your size management. If you're getting an optimal opportunity, you need to bet big, and if it's not at structure, you need to bet smaller. Don't take the trade. And in this way, you're really putting yourself, you're really managing your risk and your size, because this is where the market's making those decisions. So on an optimal strategy themes, what do we want to do? We want to fade momentum into sentiment, or we want to accept what I call a reversal, where in the market, we know that energy is down here, so if the market makes a play for that level, it's going to take out this structure point. But then if it can't hold below it and it pops back above it, that's what's called a reversal. And so that's what we're looking for here, a capitulation off of 42.59 or at 41.55 as a fade. And what are some hedge strategy themes? Well, if structure is going to break, and if we're going to get a play for these levels, we're going to go below the midpoint of this critical range, and that's going to be a failure or a sell DI or breakout. And that tells us we're in a corrective move. And this corrective move would set up a buy opportunity, but it's money. It's an opportunity to set up a break. What's another hedge strategy theme? A sell UP reversal, where the market breaks out above our structure point at the top, critical range upside pivot, and can't hold it and fails. And so typically, that's a typical strategy for a bull trend early in the session, where you get a big positive push. Sentiment's way below the market, it exhausts here, and you get one of those breaks all day long. And so this helps to do a couple things. It sets up an opportunity, but it also is a great place to reduce your profit give back. All right, so basically what have we done? We've set the context of the state, the structure, and what strategy themes that we want to look for. And so the next thing that we want to do is we want to get involved with, okay, well, let's take a look at the live action and see how the market's performing within that structure. Identify price actions performing to the characteristics of the state. Is it performing like a bull trend? Let's observe a price action within the price map framework. Is it holding structure? And is there any strategy theme in play? So let's go back to the live market here. Take a look at what's happening in Bitcoin. I'm going to build this from scratch so you guys can kind of see some of the tools that we have. So I've talked about this before. Another part of structure is time frame. And so if we're looking at this is daily structure, and we also look at what happened the previous day. So we're going to look at the previous day's high, previous day's low, midpoint, and close. That gives us some insight. I also threw out on today's chart the previous quarter close, which is basically the year-end close. So this is a major factor. The market is January. We're coming to the end of January, and are we going to close higher? Are we going to be ending January higher on the year? And so right now, today, as is, if this continues, we will be. And so we're, currently the market early in the session made a play for the year close, and it bounced. Okay, so now let's build so we know we're in a positive trend. So we're buying breaks. So just based on this expectation of context, we're looking to buy breaks. Where are we looking to buy breaks at? Well, we're looking to buy breaks above here. it didn't give us that opportunity. So let's put it on the critical range, and it did stabilize off the downside pivot, and we also had good confluence with the alignment. So what we're doing now is we're identifying real-time facts. What's the behavior of the market within the structure? We know where context is bull trend, and within the structure of the market, what is, we held the downside pivot. We also noted good alignment, and this is where you can bring in other technical tools as well for alignment. The structure of the market is trumps all subjective technical analysis because it's a quantitative structure. But then in this time frame is also just factual structure. But then if you wanted to add your subjective analytics and they come into alignment, it just adds value to the opportunity. So the fact that the previous year's close or previous quarter close, because we look at quarterly structure as well, is in alignment with the downside pivot, it made this area a little more valuable, and that came into play. And so what strategy themes are in play? Is anything happening right now? Well, at the start of the session, the market was not trading above the midpoint, so it actually flipped us into a hedge strategy theme because we were below the directional. It wasn't really a true breakout because breakouts typically start above, but we were in this hedge strategy theme here targeting the R level. And so that's what happened. And here's that $700 move that I was talking about. So you get a move from one major price map distance to the next. This gives you your trade vision. You can see that there's a lot of other levels here on our price map. And so we can use those to manage positions, to look for other minor opportunities. These aren't the only opportunities in trading. They're just the ones you want to bet bigger. And so here's where that half segment move came into play. So you have a 350 move, 350 move, $700 move, 350. Here's another 350, 350, and kind of going back to this reward area. And so this is giving you your expectations for your trading. And we know that this is the optimal opportunity. This was another good opportunity, but we didn't get the capitulation that we were looking for. This was a sell opportunity here, which worked out and paid out half APMD and just at the top of that, what we call our metric boundary. But then what happened here is this hedge strategy theme, this negative structure, and it's simple as that. You're just watching this impulse here. It's moving lower, and just as you have price structure, making lower lows, lower highs, you get a break in market structure here. So the market breaks market structure. It goes below this, what we call our critical range negative level. And it should just continue lower and fall off. And it stabilizes here, gets back, it's below the previous day's low. This is all super negative. And then we do this. We don't follow through. If the market was really bad and was really going to correct, it should stay below the previous day's low. It should stay below this metric, and it couldn't do it. And then the market starts to base above there. So what happens there? We've pressed the previous day's low. Well, why not go press the previous day's high? We got FOMC coming out later, and the market just pressed it to the downside. Now it's looking to press it to the upside, and so that's what happened. And you can see, with the structure, the market kind of is climbing this ladder. And so this was the tell here. The market stabilizing here, and then you get a transition. You get a buy DR or a breakout, so you get a breakout above the midpoint here, and that produces this another $750 opportunity. All right, so as we're defining our opportunity, if the market is performing to the expectation of the state and holding structure, then look to participate in the optimal strategy theme. Okay, well, and that's basically what's happening right now. But even if it's not performing to the expectation of the state and it's breaking structure, then look to participate in the hedge strategy theme. And if neither of those things are true, don't do anything. And so let's take a look at how that plays out. Before we get into Bookmap, we had a market that was in a hedge strategy theme. It was working. It paid out a little bit of money, and then it broke structure. It didn't hold here, didn't hold here, and it told us that this is over. And so when that happens, when the market is in a corrective state, it's in a hedge state, and it breaks structure, and so it stops being true, then we can just cross this off the list. You know, we were looking to buy breaks anyways. It did give us our optimal opportunity to get involved. Doesn't mean it's not an opportunity to fade this move. It's just you don't want to trade it big. You're looking for a capitulation. That's when you want to hit it big. And you want to fade into here. That's when you want to hit it big. But then when the market turns here, it's telling us, okay, well, we have a break in structure. We're no longer in a hedge strategy theme. We're either in an optimal theme or we're going sideways and going nowhere. And so at this point, the market starts to perform to the expectation of the state and build higher move highs, higher move lows. And as a trader, when you clue into this fact source and you recognize that, when do you jump on this train? The market broke price structure here. It broke market structure here. After it did this, it should not have done this. So the market told you here there's a problem. We're either going sideways or higher because this hedge theme is broken. And then when do you as a trader, kind of get clued in that, okay, things are transitioning? Is it here? And this is where we're going to jump to Bookmap. Well, let me see if we have this in here. Is it here? Is it when they get above the previous day's close? Is it when we transition back through the directional? Absolutely. At this point, you have to be, you have to say that this market's starting to perform like a bull trend. And where can it go? We can go test the upside pivot. So that's $750. So whenever so when do you clue into that? So let's see how much data we have here and take a look at that move, because that's the next step. We want to execute our tactics, and so we can standardize our entry and our trade selection. We can standardize our size management and position management, and we can optimize our trade tactics with order book events. Okay, so what's that mean? We standardizing our entry, standardizing our size, and looking for order book events to give us insight. All right. Let me just get this lined up here correctly. So we're looking at this is this high, and then that's the test of the directional area. So you can see how here we have an integration here that integrates the structure into the heat map. And so when we had this, let me dial this down just a little bit. So as the market's coming up here, we have a couple things, actually that's happening here. So this is actually a great opportunity. I love these trades here. Pull this up just a little bit. So as the market is working lower in this hedge strategy theme, and it's working lower highs, lower lows, and it's also climbing the staircase, climbing the ladder down, and we get a test of the metric boundary, which we know that this is a monster area, right? It's the previous year's close. This is huge. Everyone in the world is looking at this price point, and are we going to close up for January or down? So we know there's going to be interest at this area. Is it going to continue to roll over? So the market trading below the previous day's low point is negative. We have a little bit of slippage here. The market trades above here. Is it foreshadowing? Turns out it was, but it doesn't have to be. And the market comes down here and says, okay, we take out this price structure here, and everyone in the brother is like, oh, we're going back down. We're going to take this out. Nope, we're not. And so this is so key. So when the market doesn't follow through here, we're working this, and you have the view up here too, and then you get this, it can't follow through, you get a little bit of intensity of trade happening, and the thing flips. And you're happening at this, and you're making that decision at this lower metric boundary. So this becomes, sorry. This is your trigger, because if the market should follow through, it doesn't. Here we've made a new move low, but now we broke this, this microstructure here, and we got above it. So now, what's the expectation? If we, these are great trades, and they're momentum trades where if you're jumping on here, the market really shouldn't trade back below this level. And if you have, you've got this little price structure point here to use, just say, okay, my story, this is my story. It's going to transition here, and I'm going to at least make a play for the directional, and it does. Why the directional? Because it's going to test the previous day's close as well. And so we have something here. On Bookmap, the liquidity was a little bit farther above the market, so actually the liquidity was coming in here. So this would have been a more like, this would have been, you wouldn't have gotten everything off that you wanted to. I like to use these liquidity markers for where the market wants to try to make a play for. But the big thing is that the market was telling us that, hey, we're transitioning. Then we get a pullback. We get this emotional dip without a lot of intensity, and then we start to get some liquidity building up here. So if this market was really bad, it should just stay below this metric boundary. It should just go, and it's not doing that. And so this is another, bottom line. It's cluing into the context. So what do we start out with? We know we're bull trend. We know that's the context. We know the hedge theme didn't work, so the market's performing to the expectation of the state. So that's our mantra. You're sticking to it. It's buy dips, buy dips, buy dips. What's the where are the signals? Well, we can use the structure to give us insight. And here's another insight here where the market's making a decision, and we can see how the market performs around these structure points. I also like to, the view up is also a nice little guide. So as we're coming in here, the market, gives us a nice squeeze. We don't get a lot of intensity happening here. We have alignment with the VWAP and that's upper boundary. If this negative signal is really going to, continue to roll over, the market's going to top out here, and it's going to be contained by the VWAP as well. And then we get, some intensity of trading coming in here and buying this. But we're not that interested in selling anyways, because it's sucking us into a break to buy, and we want to stick on what the main theme is, which is bull trend. Until it's broken, it's not. And so here again we can work this, and we're getting a signal here. What's the expectation? At least $350. Boom, they give it to us. We have the previous day's close. We also have this. We had this liquidity shift down here. So then when we see something like that happen, if we're getting involved, this gives us an opportunity to take something off. And what does liquidity in the book tell us? It tells us it's coming in front of the figure. It's telling us it was actually defending this high point here. And then we come in and we take, so it takes out that liquidity, takes it out, and we get another retest of the previous day's low point. So again, always keeping an eye on what the context of the market is, right? So now we're back above the previous day's low. We're holding above the previous day's low. We're holding above this metric. And what's this picture look like? It looks like a positive trend, and that's the expectation. So then, where can it go? Well, we can make a play for the previous day's high, right? And so the previous day's close is a good momentum level, and that's in alignment with our directional. We had some liquidity, come in here and try to press the market in front of our figure. We have an expectation of transition, right? So how do we jump on the train? We had the market take out the previous day's low point. We had the market make a play for the year-end close. we're coming off of it. We broke structure. The underlying context is positive buy break. So we have a lot, so now we have this expectation of a transition. We tried to press it to the lower part of the critical range. So why not make a play for the upper part of the critical range? Especially, we take into a context, we have FOMC and what's going to happen today. And so then you get this valid, so you get the transition here, and this is how this structure helps you anticipate. It's what it's all about. Making money in trading is anticipating. So you get the opportunity to anticipate, and then you get this validating support coming in as the market sweeps through the midpoint here. And what do we know about this upside pivot area? We know that's the top of this bull trend market state. This is where the market's going to make a decision. It's going to make a decision. Are we going to extend, or are we going to stall out? So as we get this big, flurry of buying here, they're scrambling. We have an expectation. We also have this liquidity that's been sitting up here for some time. And it's coming in alignment with our structure. And then we have some additional liquidity building up. We have the market basing here, and it's basing above the previous day's midpoint. And then we get a surge, into that area to take out some of the, it takes out some of that liquidity, and then this liquidity backs off. So that's here. And we get a pullback back down to here. So as long as we're holding positive price structure, this the positive trend is all true. Everything's all good. So the fact that this liquidity pulled back, maybe we're going to get potentially another surge into this structure point. We know this is our, where the market's going to make a big decision, because that's the high point of the bull trend structure. And so then we could see that the liquidity building up here. So it's telling us that, this thing can squeeze all the way up to the upper metric boundary, and it's going to, we still have some sellers there, and they're actually just a little bit above. And I like seeing, let me shrink this a little bit. I like seeing this kind of stuff happen when you get a big bubble of buying here that doesn't follow through. And what's even better yet is if we had another press up here and we don't have any bubbles. So we have, some of this intensity of trade pressing into this structure high point, and then if we get another test into here without a lot of intensity of trade, that helps with our timing. That just says, hey, maybe we're, now's the time that the market's ready to potentially turn over. Let me pull our, since I moved our time frame down, I need to change these. So you had this, big intensity of trade. You have this, this intensity of trade here. We have a lot of liquidity building up. We have the previous day's high point above the market, which is basically where this is coming in from. And then this number, this 44,018. We call this our critical range positive extreme. This is what it is. It's our extreme for the critical range. So if we did get a blow off, this is kind of the natural, as long as this price point remains intact, and it's not invalidated by taking it out, this is the kind of the extreme for any capitulation to the upside. Trading above, outside of this this figure, that tells us that we've got a new breakout is confirmed, and so that's how that comes into play. So the other thing I want to mention is, we are, there is a potential for a reversal. So we have not, the market is not traded above this metric boundary. So for us to look for a potential reversal signal here, what that means is the market needs to trade up here first and then trade back down below here. And then that constitutes that capitulation exhaustive. It's over. And until and so that would be that signal. Right now, breaking, if we go trade underneath this price structure here, it's really more of a pause in the positive trend. And the market is just showing it's still climbing the ladder. So the expectation here, for any kind of pullback, is that the market's going to continue to stabilize above basically the previous day's midpoint, or this 43,300 area. And so we do have some liquidity here that's moving around, around this area, and that's basically where it's supporting. So this positive momentum that we're in, it's all in play above the previous day's midpoint, which is in alignment with this metric boundary. And as time goes on, the VWAP will end up shifting up here, and then you'll have that alignment. And that's what you want to look for. You want to look for liquidity. You want to look for structure alignment. And I like to, if the VWAP comes into play, I love using that as a momentum guide as well. But since this is not a reversal signal, plus the fact that the market had the opportunity to squeeze everybody here, and it didn't. And so most likely, as we're coming into the end of the period for FOMC, it's going to get kind of quiet. But that's, kind of using the different structure. Yeah, if you have any questions, you feel free to post them, and also you can put them into the Discord channel or email us directly. So I'm going to go through. Let's take a look at Ether real quick, and just we can go through and see how quickly we can really rip through all this stuff and get some insight into these markets. You take this is such a time saver for you. What are the facts? What's the truth? Understanding what you have here and how quickly you can really take advantage of markets. So let's pull up Ether. So Ether is similar to Bitcoin, where it's in a positive trend. Everything's the same. What's a little different is that the sentiment is a little higher. So instead of being at what we call our DT1, it's at that critical range negative extreme, so that the lower part of the critical range. So Bitcoin is a little wider to the downside, and Ether's a little tighter, so there's a little tighter band. Ether's trading in $47 segments, so $23, almost $24 half segment moves. And similar strategies where we're fading momentum into the lower structure, and we have using the midpoint directional and the upside pivot for potential reversal signals into a hedge theme. So when we look at Ether, we have our previous day's high, low, midpoint, and close. So the midpoint and close were right, real tight. That just gives you good insight to, it adds more value to this kind of area, because you have both the midpoint and the close at the same point, which worked out. Basically it was, kind of identified the early momentum. The market couldn't get above that point. What's it going to do? It's going to test the lows, previous lows. If it can't trade lower from there, what's it going to do? It maybe test the highs, at least test back to the midpoint. So that's just classic. And then here's the the end of the year close. And so the market's keying off that today, and in Bitcoin it's keying off that in Ether, and that came into play exactly. So where's the where's the structure for Ether? Well, Ether is 2267 is the sentiment bias. So that, so this is interesting where you've got a market in a bull trend, and you have the year close 2023 year end close coming in, just above that figure. So then let's put the critical range on here. And so the other thing that's interesting here is that you had this previous day's midpoint and close that's in alignment with the directional. So when we look at our strategy themes for Ether, it's a little more precise on how things played out, where the market actually did start above the directional, did produce a sell DIR breakout, and did pay out a full APMD, which set up an optimal theme, because here we have a reversal signal where the market does go below the metric boundary of the downside pivot, which just turns out to be the previous year's low point, and we produce this reversal signal. So now we're in a buy DP reversal where the market goes below the metric boundary, comes back above it. Here, this is classic where it retests it and retests the figure, and it pays out an APMD. So it's paying out our $47, $48. And it's not over. The fact that the market traded above, basically made a new period high for the session, it's still climbing the ladder. So let's put the minor structure on here. And you can see how that kind of works out, where here on the failure, the market traded right below it, and then it held there. It held below it, pulled back here. This is classic. And this is, again, you're just observing price action within structure to get insight. So let's take a look at this. So this is, this is what we're looking for, this kind of intensity of trade, this, excitable selling into structure. So, we're the other thing about this is that you're teed up at the start of the session. So you're anticipating. You have confidence because you know what the condition is. You know where you want to act. You know what you have to risk, and you know what it's worth, and it's all fact-based, and you have that information at a glance. You're good to go. You could flip into any market once you have a better understanding of the different contexts and different characteristics of the different states, and then you have a better understanding of how sentiment skews those states. It's a weapon, and here you're poised that. Yeah, there's an opportunity to sell the market below the directional, but it's it's a dangerous trade because it's going against the trend. It's corrective, and I definitely don't want to have it mess me up to miss my buy opportunities, because that's the optimal thing. The optimal thing is to buy breaks in a bull trend. So I'm completely aware of that. It does provide me an opportunity. Again, if you're a machine, you just trade 24/7, then you were able to catch that. And if you're not, and you're coming in here, what do you know? Well, you observe price action within structure, and you can see that, okay, well, the hedge strategy theme played out. And now I can see, looking back historically, we've got, a nice capitulation here with a big intensity of trade into our figure. And this is actually this signal here. So the market, we're not able to see this, but it's the same thing where you're having the market tells you here it's a reversal. We're buyers. The expectation is at least the market's going to the directional, one segment move, one APMD, if not the upside pivot. The market tests our minor level, this CR minus, and then we get a reaction back down to the downside pivot, which is also in line with the previous day's low, and we get this big intensity of trade coming into this structure. So this is classic. And then when the market doesn't follow through and can't stay below this metric boundary here, which is also the previous day's low point, these are opportunities to add. So if the market tells you here you want to be a buyer, maybe you missed it. You're not chasing it here. You want to execute within these metric boundaries, because then you can define your risk. And then when you come in and it gives you an opportunity, and then it starts to go, and you're already in here, to press it when the market starts, is it going to press further in? No, it bounces right back above the metric boundary. That's a tell. Same here. When the market trades above here, that's another fresh positive signal. That's to add on to an opportunity, because the expectation of the market's coming here, if not here. So if you do put more size on, you dance out of some of it. It just kind of, you basically align your tactics with this underlying strategy theme, and you execute at structure, and you use the order book to look for that alignment. So as the market's coming up here, we had this resting liquidity at the lower end of the directional metric boundary. So this also tells us here where we want to put our orders. We want to get out in front of this. So if we're entering here and we're looking for 1 APMD, well, we're going to take some money off the table here. And you know what? If they give us a dip down to here, we'll put it back on. And in this situation, what are we looking for? We are looking for some, we don't have a liquidity support, but we do have the VWAP. We know where our risk is at. So our risk is defined. So is it worth it? Do we want, risking below this metric boundary for a play back up to this directional area? Yeah, it's worth it. And so now the market is, what's happening? The market's transitioned from corrective to now we're performing to the characteristics of a bull trend. And what should happen? The market should start to stabilize. So let's just take a look at some of this action here. We had a big intensity of trade happening, and all of a sudden we get some liquidity here that caps us off at the top of this metric boundary, which is also the previous day's midpoint. So we have some real clear liquidity as a trigger to the extension of the next move higher. But are we going to get it? Is it it? Or are we going to wait till after FOMC? So just reading structure without any other insight to any other news, what's happening at the moment is the market is, kind of stuck within this metric boundary of this, what we call our directional. And we can see, we have some structure here right at the figure. So this is, it's classic pivotal opportunity here where, what's more likely to occur? We're going to go higher. We did top out at the midpoint. We took it out by a little bit. Okay, so we're back kind of in a sideways pattern. We're in hold. How long are we going to be on hold for? But what's more likely to happen is the market's going to make a decision within these metric bounds. And we can see we have some, liquidity here below, currently bid below the market. We know this is our upside trigger. So basically, if back above 2346, our expectation, we take out this liquidity, it should go, and we should, we're going to continue to buy dips above the directional. At the current moment, it's below the directional, so it's a little bit, what if? So we're, kind of keying off this lower metric boundary area here, and we're looking for the order book to support it. But seeing how the market is really defining this area, it also gives us confidence to this lower part of the area, the lower metric boundary. So it's all rotating around here. And what do we know for our risk? Well, we know that if we do transition back above here, we can get a move, up to 2380. Try to make a play for this. So that's what you're so that's what you're basing your risk on, and since this is at the directional, this is your bigger size trade. This is a little lower size trade. If you did an add-on here, that would be even lower size trade. But you're within the metric boundaries here. And what's your risk reward? And if it doesn't work out, you're gonna, it's still a break to buy, and you could you could reload down here. So it's observing price action within structure in the context of the market state, and then using the dynamics of the order book to really tweak out your opportunity in the moment, and using the order book to help you identify when's the right time to act and to execute. And so I showed you the playbook. This is our price map. This is our price map integration with Bookmap. And what this does, it really zeroes in on having a fact focus, really focusing on truths. And that's what we provide you with. Again, if you have questions, you can email us at info@dharmacapital.trade. But that's the big part of our method. We incorporate this statistical outside view to help you slow down the decision-making process, to help to minimize biases. And this is right out of Nobel Prize winner, Daniel Kahneman's book, Thinking Fast and Slow. The outside view offers more accurate predictions than the inside view. And what he's saying is that, most of us live our life, making decisions intuitively. We don't really think, yes, no, do this, that. And same with the trading sometimes. And but what's important to do when you're trading, you've got capital at risk, is you need to slow down and focus on the facts. And if anything, if this is just to help to tap the brakes, to kind of run it through the filter of a benchmark, run it through that benchmark filter. Is this more likely to occur, or is this trade just a hope trade that I'm hoping that this one time what's more likely to occur won't occur? And when you can only do that so many times, and then you'll find yourself seeing that, and you'll get out of those trades quicker. And then when things are in alignment, you're going to be able to hold on to those trades longer, and you're going to be able to have the proper size with them as well. And you just condition yourself, because you just can't fool yourself. You're going to stop hitting yourself in the head with a brick, and you're going to stop hoping that it won't hurt, because it will. But if your trading is in alignment with the truth, then it's all good. So if you enjoyed this video, like it, share it with your friends. This is, what we do is just to, look to give you clarity, provide you with clarity. That's what all these tools are: our playbook, our price map, and our integration with Bookmap. You can go to our website at dharmacapital.trade and learn more. Again, follow me on X, check out our YouTube, and we have a Substack that we publish a weekly outlook on Bitcoin. And then again, feel free to email us directly at info@dharmacapital.trade. Well, first month of the year is about to be in the books, and we've got some new interest here in the markets with the ETFs. It's going to be an exciting year, a lot to do. So having good structure and good tools is what it's all about, and we're here to help. So hope you enjoy that, and have a good day. Cheers. Hey, John. Hold on one second. Hold on one second. I'm on the phone. I have fun. Hey, Thomas, what? Right. I'm going to double check those links because it should just go right to. Well, we want them to register, so once he registers, I can send you the other link. I'm going to make sure that that link. So what's happening is it's making him register, and it's not directly to sign up. So I've got those sign up links. So I'll let me take a look at the website. Uh, okay. So he wants the options room. Okay. Well, let Spencer know that, and I'll post a link in here for you as well, and then I'm gonna go check on the website to make sure that people can just go there and grab it. The thing about the registration, it is a good thing to do because then he can get access to the tutorials. Yep, no, I'll change that this afternoon. Yeah, so I'll post that link. I'll post both the links in the room in here on Telegram for you, and we'll get that done. So we're getting ready to go here with the fund, and so no, I just want to give you a heads up. So I'm gonna need to get set up. Yeah, I'm gonna be doing most of the stuff RFQ, but I might as well have a Phoenix login too. So this will be the Dharma Capital, the fund login. So I don't know if you want to get me teed up for that, because we're getting the assets going right now. So, yeah. Okay, cool. And then yeah, and with Tyler and working with Perry, you know, I'd like to figure out, try to figure out some kind of solution there. Oh, yes, okay. Okay. How you doing, man? Dude, that's huge. I feel good about that. That's awesome. Yeah, well, I'm going to ping William here right now and see if he has any news for us on that. Good. My dev got back to, he got back to me. He's like, we better meet. So I can meet him either tomorrow or Friday, so I'll have better clarity on that. And just getting the data crunched. So we're moving, definitely moving forward on those things. With the room, so that, basically Spencer's been watching the options room and doing stuff in there. The whole room stuff is just frustrating. It's like, we don't really have people in there and we're not really charging for it, so. Yeah, I don't even know. A lot of them are, there's some free people in there, so I'm not sure who's actually paying us. But no, that's great. Thank you. What I'm wondering, I'm wondering with Spencer and I, if we should just not have two rooms. Right. So why don't we just have two rooms, and then do we just you guys would just say the same thing, but then just change the rate. I gotta talk to Spencer, but I think we just have to just consolidate that, because if he's not looking at it, then I will be, and if I'm not looking at it, he will be, and if we're talking options or we're talking spot, what's the difference? And we're trading crypto, and yeah. So for now, we just need to get people in there. So So maybe that's what we do, is we just drop the options room, and we just stick with the crypto room. So I'm going to give you the email to the crypto room, and I'm going to talk to Spencer about that. No, they're all paying in I think they're all paying in the futures room, or not the futures room, the spot room. And that's where that's when I see. I got no one logged in. Everyone's logged into the spot room. Yeah, that's what we'll do. We'll just consolidate, and if people have questions, if someone's not an options trader and they got questions, they can ask. If they don't understand, then Spencer can. Because we haven't had, we've been kind of just running all over the place trying to get something going somewhere, right? So getting the fund up and going is going to help to kind of consolidate what we're doing as well. So it's going to make it easier to get into a flow and then be able to do stuff. So without anybody in the room, I'm just coming in the morning. I'm publishing my thing at night, coming in the morning, saying, identifying what to do. But I could see us, potentially doing more. Because we're going to be online doing our own thing anyways. We're going to be working. So, yeah. Yeah, but then again, I'm not. Again, I'm not doing. No matter what, I'm not. That's not my business, right? My business is not to be a crypto kid talking positions. Okay, we're going to be running a fund, and I'm going to give you insight. And if you want to get that insight, then make it work. If you don't. I'm not. That's not me. So Mike Williams, yeah, he's out doing his thing, and we're working on a deal to get that done. And he wants to bring people in, and so let's get Phoenix set up, and then we got to we got someone doing that. The guy in Brazil that you talked about, yeah, I can work with him, and let's get him doing it. So. And if he wants, they need help understanding what the price map is, I can break it down. But the good thing is that we got getting the fund up and running. at least for me personally, I got now at least I have a focus, and I got that going on, and that's great, and then I don't have to kind of be jumping all over the place, doing different things. Tyler is a big asset though, okay, and he's someone who, he ran one of the largest bund books on the floor, and he also worked with all the top option funds shops, with a lot of his clients. So he even told me, yesterday, he's like, I'm gonna go reach out to these guys. They gotta be doing something great. So, he's old school. He's definitely like the marketplace doesn't appreciate him, right? They don't, but he's got some really great skills, and he knows all the people that are probably that were in charge, and if they weren't in charge then they were clerks, and then now they're in charge. So he has potential to bring in business. He absolutely has potential to back us up, to execute. I just want to figure out a potential way to do that, so orders are coming from him. So when Perry gets back, we kind of sort that out, or we figure out some other creative way to do it. We're making money on getting the best prices, right? So I'm not making, it doesn't. For me personally, I don't want to give up a spread. I want to get as much premium out of my trades as I can get. So that's my incentive. It's not to churn the account. That's not what we're doing. So. But no, it's exciting because we get that going, and it has the potential to open up, doing more. So it's all good. It's all in line. Yep. Well, it's got a lot more flexibility than any of the exchange platforms. The exchange platforms all suck. Well, let's get them all on the price map. We will. Mike, I've got an agreement with Mike, and we're finalizing it. We're getting the payment thing set up so that people can sign up for the price map through his website, and that's what I want to do with people. So if you see if you see people that are like this guy that out of Texas, I want to partner with those guys, right? I want to support them with the education. I want to get that guy into the VTF room. Those are the guys that I want in the VTF room. I want them in the VTF room so I can support them, so then they can blast it out to their people, and they're all signing up for the price map or the playbook. So that's exactly what I want to do. Just like your Brazilian guy. Yeah. I'm on it, dude. That's done. You don't have to worry about Mike Williams. He's thrilled of our relationship. He loves the whole idea and loves everything we're doing. We just need to get it engaged. And that's my program. So if you see people out there in the world that are like Mike, let's connect. That's my marketing strategy. I want to work with those guys. I don't, I want to trade the fund, and then I want to trade an alpha program with Spencer, and you when you're ready. And, and that's what I want to do. And I want to have and then support the price map, support with, education, teaching people, putting it into the platform, and getting people on the platform, getting people on Playbook and connecting that to the platform, getting everyone just trading business. Oh no, we're beyond talking. I mean, I've got an MOU that I put together. We've got the devs are together, so we're connecting it. The reason I like Mike a lot is he's true, and he wants to really help people. So we're so in alignment there. I definitely am not interested in people that are just trying to fuck people. So, but if if you come across groups, yeah, I mean, I want to. Those are the people I want to connect with, and then we can figure out. A solution to pull you into the deal. I don't know how that. If we can't, if we can't get. Well, right. This second. He is working. I had a good conversation last Friday. He's like, I really want to get this done for you guys. Well, I mean, the positive thing is that Marcos and Fabian are both in the office. It sounds like he went to talk to them. I don't know if they're sure if they were just busy, or all of a sudden Marcos and Fabian realized this is a bigger conversation. And then they have to get together again. And then was he able to grab them? But they're both there, and yeah. I mean, how long is it going to go on? So we'll see. So I just pinged them. So. But yeah, so the good thing is we're going to start. Dharma's going to start executing some stuff. So at least from your side, you'll be able to we'll get some better attention. People start to listen to us, I guess. Well, that's cool. I mean, we're just, yeah, I mean, we're on the same team. Yeah, I mean, I understand the business. I understand how I can help, and, help each other. Let's get it done. Let's rock and roll. So. Yeah, no, I'm ready, dude. Right. Right. All right, sounds good. All right, well, I'm going to update the website. I'll drop the links in there. I'm going to talk to Spencer right now. And I'll talk to the T3 people too, and we're just going to consolidate. All right. Thanks, John. Okay. Peace. Bye. Spencer. How you doing? Good. So I spoke to John Devine. He says he's got a new client for us for the VTF, for the options room. You know, so my thoughts are, you know, we should just combine the rooms. What do you think? Yeah. Yeah, I mean, right now, there's not really anything to split, so there will be something, you know, so we can figure that out. Okay. Yeah, nothing. I think I'm gonna talk to the T3 people and just say we're gonna consolidate the rooms. I mean, I don't know. I guess we just stick with the same pricing for now. Yeah, I mean, we're just, you know, we're doing what we're doing anyways, right? I'm posting every day, so now I'm posting 2 rooms, which is good. And then, you know, we just both add color in there. We figure it out, you know? It's, it's, I think it, you know, we probably make, absolutely what can happen, well, I'm not sure how it's gonna work, but when Price Map gets into Phoenix, that's gonna get, you know, more traction. The room might just talk about options. I mean, we'll see how the room flows, which way it goes. We just need it, you know, we just don't have a lot of people in there, so we're not doing anything. I think it's someone that doesn't have a clue. So, I mean, we need to, you know, if we're gonna do anything with the room, we just need to have kind of something set that, you know, I mean, I think we just talk the programs anyways, you know. Basically just break down the pieces, different pieces of the program, and we just start to, you know, we talk about what we wanna do anyways, and, you know, and then if people like what they're hearing and they can't handle it, then do you wanna invest in us? You know, basically that's what we've been talking about from the get-go anyways, so. And it could just help us refine stuff, cause I mean, we're selling calls or we're buying gamma, right? So. Yeah, I mean, you know, we still need a course, you know, so, I mean, right now, my complete focus is just on this program and getting the program set up, right, and getting the first trade done, so, you know, and yeah, yeah, I should know what the deal is right now, but I don't, so I don't know how the splits are gonna come down, and I don't know what it's gonna be, you know, I have no clue if it's gonna be, how they're gonna look at it, you know, since they're bringing everything. Right, which may actually go against us in terms of splits, you know, because all of a sudden they're looking at it like, oh, I mean, we'll see. You know, I'm just thankful that we have the opportunity, and we'll see how it plays out. And end of the day, it gets us in the game. And best case is we don't have to think about anything else, and we just focus on this and getting that done. Because absolutely, this strategy is the same. I mean, we get this thing up and running, we perform, and we get flow going, and then I'm gonna pitch to get you know, this 5S account for Alpha Token. So this week, meaning today, Wednesday, it's already worst case.
Right, we're done for the week. The reason for that is we traded over, directional traded under, traded over.
But I thought you weren't doing anything until you traded over the CRs.
No. So this will trade over the directional against the CRs, and then it'll trade over the CRs.
All right. Well, we need to, so the stuff, the probability stuff that we're doing. Well, one, you're missing part of the program, right? Because an R5, this happens, right? This is normal. This is a strategy. This is an R5 strategy. This is a picture perfect R5 strategy of rotation around a critical range rotational trade. That's so that is a or the CR rotational trade is one of the, it's either a CR rotational trade typically, or it's the biggest trade of the month.
The 2 days prior, I was thinking it was going to shift down because that's what the new month or the new week was showing. We were going to be like an R6, and so that would have been great. The R5 was not an ideal situation. So potentially maybe we just put these on Sundays and we just need the 2 days of data, which was, I don't know, there's a couple ways.
Well, think about it this way, okay? Think about it in terms of playbook. Okay, so absolutely, one, the work's already been done in terms of logic, right? So yeah, we want what's the optimal thing and what's the hedge thing, right? And so our the strategy needs to take that into account. And not only that, but as we build that out, and if we have as we build strategy themes out, so like just its current playbook has directional, optimal, and hedge strategy themes, and when we go into the options section, we can have income strategy theme. We can have a volatility strategy theme, but then they're going to have, optimal and hedge. And we need to be able to, we should be able to take advantage of both. And so as we're writing out these decision trees, that comes into play. And at the end of the day, all that stuff can go into a playbook, right? But like we're talking about with Diego, and if we're going to build out if we're going to have an options playbook, like build it out and incorporate everything that we're doing, and sell it, and have other people sell it for us, basically sell our homework, right? And that's what we're going to do. So I mean, it's either going to be we're going to extend, like we can easily just add text files to the current playbook, but if there's an opportunity that allows us to have a live dashboard playbook, then that's another thing to sell, and so it's all good, but we don't have to overthink it, and we need to standardize and simplify, and so it's done. So as you're looking at the regimes, I'm in an R5, I'm in an R6. It's what's the optimal thing to do? What's the hedge thing? And if you want, we just knock off, I don't know, 30 minutes a day. We just go through it. If we meet a certain time of the day of the week, we just talk about each one and we knock them out. What's the we get one done, we get the next one, we got 9 more, right? And then we fine tune them from there. But and the same thing and then part of the decision matrix comes into play of, okay, well, what do we do with these extra 2 days because we want to start something on Thursdays? Well, it's kind of the same thing that we have to deal with the call rate program anyways, right? And that's why to me what is going to make the most sense is that we incorporate the quarterly. So just as so now we incorporate the quarterly for the last week of the month to tee up to potentially put on 35%. Just talking in terms of the call, right? So how do we do that before we get our structure? And then we get our structure. So with the Gamma program or the Alpha, let's just call it the Alpha program. Make it simple, right? Because that's basically that's what you I reread your stuff and I get it. I understand what you're doing. You're a little conservative. You're just covering your butt on all different angles. But the alpha program, you take directional trades too, so then that's fine. Because your program is basically should, when it hits, and it doesn't. It should tread water real nice, basically. So just with yours, we do the same thing with monthly. So we lean on, so the end of the, so on Thursday, and we have it, some if thens, and maybe, we just spend some time to think about it, basically, and it just comes down to the same thing. What week of the month are we in, and each one of those weeks will make a difference. If it's the opening week, then that's one thing, and if it's a discovery week, that's another thing, and we can, I can go through each one. I can dissect that for sure. So I can dissect it, and then give you some lead-in, and then that lead-in we have a goal for that lead-in, but then the main positions come on, Saturday night, Sunday, as soon as we get this structure. Yeah, I mean, well, when they get in there, they should know what we're doing. Basically, we should be executing it, and then we should be fine tuning that execution. I'm just saying for as we move forward here, like working with what we have, working with that structure. Just the same thing like with the program. The current, the alpha program has got everything, so if you have the call rate program, you have the alpha program, the other one is kind of, profit give back, the one that you break into 4 segments. It's either profit give back, it's either hedge, it's either, accumulate, or it's leverage, and so each one of those is like a compartmentalized thing, which could actually play into something, automated thing, but no, we have to simplify stuff. Right. Okay, so I'm gonna figure out we're gonna change everything into the regular crypto room, because that's the only room that we have anybody in signed up for, because we don't really have we have no one signed up for the options room. So I'll do that, and I'll update the website. I'll get a hold of T3, and then we'll get this guy signed up. And then we'll both be posting stuff, and then I don't know if you want to figure out some kind of standardized thing that you can post every day, like I'm posting for options. Yeah, and just do that. Just do that, and then just the other stuff that you've been regularly doing, and what I'm doing, and we don't have to do a lot. But if questions come in, then we answer them, and then we see how our time is. I mean, right now the focus is getting the fund up and going, making sure we have everything done, making sure all the counterparties that we have, we're all set up with them, and there's a lot of pieces to it. So, and I'm working on most of that stuff, but I'm just saying, where the focus is going to be on that. But there's no, we want to build everything that we're doing funnels into building something that generates income that should just generate income on its own, so we don't have to do anything for it, especially if we get it into a playbook. Well, to start. I'm behind catching up on what's going on here. They just set up a new Slack group, but things are happening. So. Oh no, we're not going to do anything on the weekend. Yeah, I mean, well, yeah, I mean, I've got it. I've got it covered too. So, but basically, we're on. So, we need, I'm more concerned about the decision matrix and, you know, what do we want, if all of a sudden we have money tomorrow, do we want to do anything? Maybe we don't, maybe we do, so, that's, if there's something to do, I want to be doing it, so that, obviously tonight's a big night for me anyways, just to do, get with the new, roll into the new structure, so I'm probably gonna do up a big write-up, just in case the client wants to meet and go over stuff, so. I'm gonna be prepared on that aspect, and, anything else that, anything you wanna look at or add to, a forecast or insights or factual info that might help us make better decisions, then, yeah, that, I'd like to see it.
I mean, if you want our transactions, that's fine. So I can overlay that over a price map. If the client has any questions.
Yeah, we're not gonna get into that kind of detail, because my brother really wants the client to make the decision, like, yeah, go for it, don't go for it.
Okay.
He wants the client to help guide us, and we're supposed to already be doing that anyway, so. That opens up a can of worms if they just say, hey, yeah, oh, well, let me see last month's, let me see the last year's, kind of thing, that's what they'll ask for.
Yeah, that's for sure. Okay.
But I am worried about, I'm concerned about the Gamma program having a drawdown. I mean, we gotta get you making money over there consistently. So we have to, we need to, I need to get plugged into that so I can, help you, basically.